Well, global liquidity year on year is not at all-time high. So we're not the acceleration phase. We've seen global liquidity increasing. It's just ticking down recently. Oh, guess what? The markets have ticked down a bit. Bizarrely, this was the banana zone phase one correction, start of phase two. We think it starts doing more of this now, which is the acceleration phase. It won't do this because obviously we don't have a pandemic. So we're looking for liquidity to rise to something like 10 to 15% a year, stay there for a while, and that will start really driving assets.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Raoul Pal talks about liquidity and the epic banana zone, timing markets, and big opportunities. Let's dive.
Here's total global liquidity. We're pretty much at all-time highs as liquidity is growing at 8% a year. That is the liquidity we think of because we're crypto people or technology investors. We think of this as great. For everybody else, including for your income, this is debasement of currency and it's totally screwing you over. Your cash savings, all of that, it's all based around this. If you're not beating this 8% annualized growth rate of global liquidity plus 3% inflation, that's 11%, your future self is getting poorer. This is the game we're in. This is why we're taking absurd, ridiculous, irresponsibly long risks in technology and crypto is to unfuck our futures. And I'm trying to help you do that and teach you how to do it. And then all you can reply is when banana. Yes, you. I'm looking at you. Okay, why does it matter? It is what Bitcoin is. It is what NASDAQ is. It is what is driving markets. In addition, there are two different scales here. Why? Because Bitcoin is exponential based on Metcalfe's law, which is a network adoption model. So over time, you get the outperformance of the network plus the debasement, which is why it's la land in terms of performance. Bitcoin, Ethereum, all the big tokens. I use Bitcoin because it's easiest. It's got the longest track record to show people within. But Solana, Sui, you choose your thing. It's all based around the same thing. Why it matters, it has a 90% correlation. So 90% of the price action of Bitcoin is explained by this one macro factor, liquidity. Oh, and by the way, 96% of the NASDAQ. So what we have, and I keep trying to explain this to people, I'll explain to them tomorrow in more depth. We have a single macro variable that explains 90% of the price action of every major asset. That makes it the easiest macro risk-taking opportunity of all time because everything else is noise. Everything is just wiggles. You see the wiggles. These are wiggles. It's just noise. Wiggles. It's all noise because this is the trend. You just need to understand liquidity and then you understand the directionality. And if you're caring about the next 3 weeks, the next day, the next month, you are doing this wrong. You're trying to follow people on Twitter who are trading and not investing, and they won't make the money. Honestly, it sounds like they do. They show their wallets. I made 100x in this trade. Most of those people don't make any fucking money whatsoever. The banana stuff drives me mad. And it's this sort of whimpering little dim-witted ninnies who are just wanting instant gratification and don't actually fucking listen to anything I say. So let's just go through just a very quick example of what we've said about the banana zone. And let's see if you can just use your dim-witted little pea brains to somehow understand. When we said in April, we said leg one of the banana zone. I came back from Africa. If you remember, we did the drinks with Raoul, and I said this is the start of the banana zone. That was August. The banana zone phase one. We then said the liquidity was coming out, and this would be the phase 1 correction. In April, we very publicly did a flash update and said, Banana Zone phase 2 is starting. And we're still in Banana Zone phase 2. In fact, Banana Zone phase 2 is going to be so big. This is SUI, right? So since the start of that,
Ethereum tumbled 9% and Bitcoin slid 3% on September 22nd, shaking up the entire crypto market. The sell-off was brutal, with more than $1.6 billion in positions liquidated in just 24 hours, the largest wipeout of the year. Ethereum took the biggest hit, losing over $500 million as leveraged positions were forced to close. The sudden drop is a reminder of how leverage can magnify crypto's already high volatility and send markets spiraling in a matter of hours. For investors, the lesson is clear. Volatility is still a defining feature of cryptocurrency. While Bitcoin has become more widely adopted and slightly less volatile, Ethereum remains especially sensitive to sharp swings. Both assets are still trending upward overall, outperforming traditional markets, but these dips highlight how fragile momentum can be when too much debt is fueling the rally. Despite the turbulence, Bitcoin and Ethereum are holding key levels, though traders brace for further swings. Long-term investors may find stability in strategies like dollar-cost averaging, keeping their exposure balanced and their emotions in check.
we're still up 670% on the start of that. But no, not your fucking banana. It's because you're the moron with the bag of shit. You need to have quality assets, not the bag of shit. Let me show you the bag of shit chart. So this is others excluding the top 10. We're still miles away from breaking out. And that's because you've got a bad asset allocation. This one, that did fine. Solana, Ethereum, Bitcoin, rock stars. BNB, Rockstar, there's all tons of stuff. And I gave you the don't fuck this up thesis. It's all there. So Banana Zone phase 2 started here, and we're going to get into the acceleration zone of that comes ahead. We'll come into that. But you guys have got to learn patience. You are utterly moronic with the short-term time horizon. Like, where's the banana? Why is my bag not going up? And you're sitting on, I don't know, some useless meme coin that you're hoping is going to save your ass. And it's unlikely to. Who said this? Don't fuck this up. Keep it major projects, big, 10% into all the stupid shit. But no, you think, oh, no, I need that 100. I've got to have the 100x. I'm never going to do this. And you actually, what you get is 100% loss, and everything else has gone up 20x. And you're poor. So let's not be poor. Let's unfuck our futures and try and follow the don't fuck this up thesis.
The cryptocurrency market was rocked by a staggering $400 million in liquidation in just 24 hours, leaving traders reeling as Bitcoin and Ethereum tumbled sharply. Bitcoin slipped below a key support level around the $113,000, sliding to $111,800 and putting its short-term stability in question. Technical charts now show Bitcoin falling under its 50-day exponential moving average, a bearish signal that shifts traders' focus toward the 200-day EMA near $106,000. A deeper drop could test psychological levels around the $100,000, raising fears of more turbulence ahead. Ethereum bore the brunt of the bloodbath, with over $178 million wiped out in liquidations, followed by Bitcoin's $57 million and Solana's $24 million. More than 128,000 traders were liquidated overall, with long positions taking a devastating hit. Nearly 95% of losses came from bullish bets that unraveled quickly once the market turned. The surge in selling volume shows how quickly leverage optimism can collapse into panic selling, with exchanges like Hyperliquid and Bybit leading any race positions. For now, Bitcoin is struggling to reclaim $113,000, while traders anxiously watch whether $110,000 can hold. The extreme leverage reset may clear the way for recovery, but short-term risks remain dangerously high. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news offer free. That's all for today's video. Until next time.